Hi friends, here you go with our next case study question from CA Final Audit MCQs and Case-Based Scenarios booklet issued by ICI. You can download it from ICI website. Okay, let's go through the question. This is a pretty simple question and straightforward. People who haven't gone through this entire study material can answer this with some general knowledge. Okay, going through the question. Arogya Pradhan Limited is a public company incorporated in September 2011 with a registered office in Chennai. The company is in the business of healthcare services. The company has 151 Ayurvedic clinics and 303 Ayurvedic pharmacies throughout the country. In the previous year, the company achieved turnover of 3,000 crores and had earned a net profit of 25 crores. The company had borrowed a term loan of 100 crore from State Bank of India. Messrs. Bright Moon LLP are appointed as statutory auditors of the company for the year 2020 to 2021. After completing the initial engagement procedures and audit planning, the audit team started with the verification of internal financial controls of the company. While understanding the controls established by the management in the review process, the audit team observed that there are only one review control wherein 20 executives had to prepare the sales invoice and Mr. Darshan, sales manager, had to review and authorize the invoices. It is observed that on many occasions, Mr. Darshan had more than 1,000 invoices to authorize in a single day. Further, he has frequently asked two senior most executives to review pending invoices and he has relied on them by directly giving his authorization on the invoice. It was observed that Mr. Darshan did not take any leave during the entire year. It was observed that Mr. Darshan's performance bonus was linked with the number of invoices authorized by him. In addition, Mr. Darshan was the sole authority to approve the sales commission and a sales discount, which was to be applied by the customers. The audit team has set 30 crore as material based on 1% of the turnover. The selecting samples, Mr. Santosh Audit Executive used the below mentioned formula. Ledger balance into 100 upon materiality into 365 days. Mr. Santosh selected 30 samples for the verification of above mentioned review control. It was observed that out of 30 samples, 20 samples had irregularities in invoice, which were clearly due to improper functioning of review control. The amount of irregularity in 20 invoices amounted to 4 crores. The auditor still issued a clean audit report, and took a written representation letter from the management for efficient implementation of internal financial controls. On the basis of the above facts, you are required to answer the following MCQs. Yeah, before we go into the MCQ questions, let's just quickly clarify a few things here. So here what is going on is 20 executives are preparing sales invoice and Mr. Darshan is one and only person who is reviewing and authorizing it, and he is having more than 1,000 invoices. Therefore, the control is not effectively framed. See, 20 persons work is reviewed by one person, so he may not concentrate on all the invoices that he is working on. And secondly, Mr. Darshan is also relying on two senior most executives to review the pending invoices. As a person, as a human, he can't review all 1,000 invoices in a day, so he is taking help of senior executives. That's fine, even if he is taking, but he need to review it before authorizing. What he is doing here, he is blindly relying on the work done by them and he is giving his authorization, which is resulting in irregularities in invoice review, right? So the review control is not properly implemented, and moreover, see here, Mr. Darshan performance bonus was linked to the number of invoices that he authorized. So in order to get more bonus, he can even authorize those invoices which had many irregularities. So even the performance bonus, the criteria mentioned is not correct. So while you're giving performance bonus, what you need to do, you need to compare the actuals with the budgeted or the standard targets that you have given. But here you are just mentioning that the performance bonus is given based on the number of invoices authorized by Mr. Darshan. Therefore, the performance bonus is incorrectly given, the criteria is incorrect, and the review control is not properly in place. Fine. And the next point is, despite of all these things, see, auditor has identified 20 sample invoices amounting to 4 crores. So all these 4 crores is due to the irregularities in review control. So which is a material amount, right? So but still he just took a written representation from the management and he gave a clean report, which is not correct. So what the auditor should do, he should give a qualified report in the sense main audit report, and then internal financial control report also he need to mention that there is some irregularities in the review control. So these were the key points that I wanted to highlight before we go into the MCQ questions. Hope you are all clear. Let's go through the questions. 32.1. Is the control designed appropriately? No. Why? No. We said answer is no. Now we'll go through those options which had no. So option D is saying yes, the review control is designed appropriately, which is not correct. We just identified many irregularities. So option D is nowhere our correct answer. We need to select from the balance 3. No, because there are irregularities amounting to 4 crore in the sample selected by auditors. No, it's not the reason that there are irregularities amounting to 4 crores. The reason is it is not been given properly. The performance bonus of Mr. Darshan is not given properly, and he is not even authorizing the invoices which were reviewed by the senior most audit assistant, senior most executives. So therefore the control is not designed appropriately with respect to Mr. Darshan's work performed. So option A is not correct. Option C says no, because there is no leave taken by Mr. Darshan during the entire period. It's okay, yaar. Who is bothering about that? Our main concern is whether the control is designed properly in respect to the performance bonus that were given and the level of review that review quality that is being coming out of the control. So option B says no, because Mr. Darshan's performance bonus is linked to the number of invoices authorized. So this is where the control is not designed appropriately. So option B is the correct option. Let's go to the next question. Is the control implemented effectively? No. Where is it implemented? See, Mr. Darshan is taking help of 2 senior most executives, and moreover he is blindly relying on the work performed by them by giving his authorization. So the review control is no more implemented effectively. Right? So we'll go through those options which had answer as no. So option D says review control is implemented appropriately, which is not the correct answer. So we'll rule it out. And then now we'll go through each and every option. Option A says no, because Mr. Darshan delegates his work of review to other executives who are senior in experience. Yeah, this is the main reason that we are pointing out. So option A is the correct option for now, but still we'll go through the other options. Option B says no, because Mr. Darshan is heavily burdened with the excessive work. If he is burdened, if you feel that he is being given with more work, then you need to appoint one more person who can review it. It's not the reason that the review control is not being given implemented properly. So option B is wrong. Option C says no, because Mr. Darshan is authorized to finalize sales invoice, sales commission and sales discount. No. So even if he is given authority to decide the sales commission and sales discounts, it's appropriately fine. But the thing is, he should not rely on other senior most executives for the review work. So that's where the review control is lagging its effectiveness and the appropriateness of its implementation. And moreover, even if he delegates, he is blindly relying, he is not even checking them once from his own side before giving authorization. So option A is the correct option. No, because Mr. Darshan delegates his work of review to the other executives who are senior in experience. And then we'll go through the next question. In the above case, to whom should Messrs. Bride Moon LLP report first? Obviously, it's those charged with governance, right? Management, whoever it is, will first report it to them, and then they'll circulate it to board members, shareholders or stakeholders are having appropriate authority, and then it will upon finalization, upon approval of those reports, then it will go to the ROCs and whoever it is. Okay, the first reporting is to those charged with governance. And option C. And then we'll go through the next question. How samples are to be selected for the purpose of verification of internal financial control? So while you're selecting samples for verification of your internal financial controls, what you need to take in, what is the main thing that you need to consider is how the function is being implemented. Let us suppose say a control is being implemented on a daily basis, or it is implemented on weekly basis, monthly basis. How it is implementing, the frequency of how the control is executing is the biggest concern of an auditor while selecting the samples, right? So option D, sampling based on frequency of functioning of the control, is the main concern upon which the samples has to be selected. I'm not saying that monetary unit sampling, materiality and probability of default of the control were nowhere relevant, but the main concern, 99 out of 100%, we need to select samples based on the functionality, I mean frequency of how the control is functioning. It's okay if the control will function appropriately, and the control might even include monetary and non-monetary also. Monetary and non-monetary effects on your financial statements as well. So materiality and the probability of default, let us suppose that the control is being implemented with 100% efficiency and no default. That doesn't mean that you're not going to test the control, right? So option C is ruled out. Option A and option B says materiality and monetary unit sampling. A control might have monetary and non-monetary effect upon your books of accounts. So option A is only speaking about monetary unit, which is not correct. Option B says materiality. That's fine, even if the control is not giving you material effect on your financial statements, but it might have few impacts on the stakeholder decisions, investment decisions. So sampling has to be based on the frequency of how the functioning of the control is. So option D is the correct option. And then we'll go to question number 32.5. In the current scenario, how should Messrs. Brightmoon LLP report? It's a qualified report, both in the main report and the internal financial control ICFR report, right? So giving clean report is nowhere an option, because he identified some material discrepancies with respect to 20 invoices out of 30 amounting to 4 crores. So the invoices are with irregularities. So he need to give a qualified report, not a clean report. Option A, B, C are ruled out just because it is being given as a clean report, right? So with this, we have completed our next case study number 32, which is a general understanding, a pretty simple case study. If you have any doubts with respect to any of the case studies, even if the case studies relating to the earlier case studies like 1 to 30, please feel free to drop your comment. I'll address it. Okay. Thank you for watching. If you have any doubts, do comment it below. And one more important thing that I'm working out currently is your strategic cost management and performance evaluation paper number 5 of your CA final group 2. So what I have done is I have prepared notes wherein a detailed explanation, like solving of each and every problem of your question study material is been there. So if you have any doubts with respect to any particular question which you are unable to solve it on your own, do let me know by commenting below. I'll take over that particular question and I'll explain you as to how I have solved them. And moreover, while referring to any particular question, I request you to refer to the latest material available on the company ICA website with the page number, question number, chapter number. Also give at least, it can be a name of a company. So let us suppose say question number, this particular case study is mainly speaking about which company? Arogya Pradhan Limited. So what you need to do is you need to write it like case study number 32 from page number 228 of ICA Audit MCQ booklet with a hint called Arogya Pradhan Limited. Similarly, you can do it for your SCMPE as well. Give me the question number, page number, chapter number, and the subject. Please do mention the subject like paper 5, and then give me a hint, a major hint, wherein I can easily identify that question. I'll definitely solve it to you and I'll upload it within 2-3 days. As and when you comment it, I'll upload it as and when. Let us suppose if you have commented today, I'll give it to you max by 2 days. 2 days COD, I'll definitely give it to you. With that, we'll close off for today for this particular case study, and we'll work on, we'll get back to you on case study number 33 from your CA final audit. Thank you for watching. Please do share with your friends who are in need. It will help them boost their preparation. Thank you.